Welcome to our financial future. This is a channel designed to build a community of investors so we can all learn together and reach our financial freedom. In this video, I'm going to go over mutual funds and the characteristics of the fees and the active management that you're going to pay for so you can get the best possible return. I'm also going to give a live demonstration at the end so you can better understand them. So stick around and let's dive in. A mutual fund is an investing vehicle. Inside this vehicle is a portfolio of stocks, bonds, and other asset classes. The underlying assets of this portfolio are picked by a professional fund manager who is always evaluating the performance of the portfolio. These mutual funds can track something like international stocks, growth companies, or even the technology and healthcare sectors. You can also track a commodity like gold and silver. There are a couple benefits to investing in mutual funds, as they can be a less riskier avenue than investing in stocks when it comes to adding them to our portfolio. The performance of the fund shouldn't be assessed by its past performance. We are going to want to look inside to see the details of these funds, and I will be going through this with you. Mutual funds are a great way to get diversified among different asset classes without having a large amount of capital when you first start investing. For example, if you wanted to create a portfolio of 10 stocks to get properly diversified, and only had $500, it would be very hard for you to find 10 stocks because some stocks can cost up to $100 each or more. You'll also have to pay a brokerage fee on these trades, so that could eat into your returns. For example, if you wanted to invest in companies like Amazon and Google, their shares can reach up to over $2,000, and by getting into these mutual funds, you can get properly exposed to these types of companies. The term mutual fund comes from the way it was created. It is essentially a group of people who pool their money together to put into the fund. These funds are managed differently, and you will be associated with a couple different fees. The first fee is called the MER, which stands for Management Expense Ratio, and this fee can range anywhere from 0.75% to 3% depending on the fund. This fee is calculated as an annual percent of the fund's average net assets. If you invested $10,000 at a 2% MER, you would be paying a $200 fee. Active management can be something that is associated with the MER. Active management will be the one picking the assets going into this portfolio, and he can choose to decide if he wants to rebalance it if he thinks he can get a better return. Active management are professionals that you can talk to help you better understand your investments and your tolerance for risk. They will be able to provide you with recommendations to help you understand your investments so you can have a better return. Active managers are professionals that you can go and talk to, and they can help you understand your investments and your tolerance for risk. They will be able to provide you with recommendations to help better understand how your investments are doing and why they would want to make certain decisions. Let's get into being familiar with the different types of funds and the fees associated with them so we can get you on the right path. The two main types of funds are open-ended and closed-ended funds. Open-ended mutual funds can be thought as buying units directly from the firm. Your money will get pooled together with other investors, and if that mutual fund goes up, so does everyone else's investments. The closed-ended fund simply means that there is a limited number of units. The fund will get closed off to investors once they have reached that limit. In an open-ended fund, you will be able to sell multiple units. In a closed-ended fund, you will actually have to go out and find another investor to buy your unit to fill your spot in that closed-ended fund. Both of these open and closed-ended funds will be subject to a load or no load policy, which means fee and no fee. If we do decide to pick up a mutual fund with load, there will be two types of fees we will encounter. The first one is front-end load, and that is when we pay the fee up front when we make our investment. The second one is the back-end load, and this is what we'll pay when we decide to sell our investments. If we had a 2% front-end fee and we invested $10,000, they would take $200 and invest the other $9,800. A back-end load is when we decide to sell our units. We will have to pay a certain percentage if we sell them early. And I say early because we can actually pay no back-end load fee if we decide to leave our investment in there for a longer period of time, which can usually be around 5 to 10 years. The purpose of these fees is to pay for active management. You're also paying for advice and the performance of the fund. Now you can get a mutual fund that pays no fees, and these are called no-load mutual funds. These no-load mutual funds still have an MER, but you will have no active management, so you will have to evaluate what's inside these mutual funds by going through how each holding is weighted. In my opinion, with these mutual funds, they can be so diversified that the risk can be very low. Paying all these fees has its benefits, but if you are able to evaluate these mutual funds on your own, a no-load mutual fund can be very beneficial for your returns. The fees that you're going to pay for active management can actually eat into your returns, so I think it can be very beneficial for a young investor to be able to learn about mutual funds and what's in mutual funds, to use it as a lesson for when you want to move on to individual stocks.
Hey guys, so this is the mutual fund screener right here. You can get this at Fidelity Fund Screener. You can see the link up here at the top, and we're just going to go over this right now. So this is how you can search for mutual funds, and the way they categorize them is either by category or risk. If you click on risk, it'll just show you how risky you want to be with what you're going to pick, or you can do it by category. And if you click here on all asset classes, you can see one that says allocation, and this is going to show you another subcategory, and it shows you how you can allocate like 15 to 30% equities, probably other things will be in bonds, and then target dates and stuff like that. And the farther you go out, the more riskier they get. And then you can look at like the sector equity. This will be just more based around equities in certain sectors. So if you're looking for a certain type of mutual funds that are targeted at a certain sector, you can just pick that. And then US equities. And this will give you like large cap, large growth, large value, or mid cap as well, and small. So it can be a blend if you're looking for the size of the company and how they're going to grow or how well their performance might be. So we're going to click on one here and go through it. We'll click on mid cap growth, and it gave us 97 results. And if you want ones with no transaction fees, just check this little box. You can also click over here and get the kind of returns you're looking for or expenses you're willing to pay, and it'll give you different searches for the whole thing. So we'll click on see results, and we're not really gonna weed through all these, but we'll just click on the first one here. So it'll bring you this page and show you the year to date, how its performance has been. And then on this chart, it'll show you how it's performed against other things. So it's this purple line, and you can see it's definitely beating the Russell mid-cap growth and the S&P mid-cap. On here on the left, you'll see the expense ratio, and you'll see the load as well. And minimum to invest is 2,500, and then the portfolio net assets is 1.4 billion. And you're going to want to just look through here. It'll show you the holdings, and you're going to want to click through that. Over here, it's the fund managers, so you can actually click on these and find out who these people are, what kind of track record they have, and then the objective of the fund, the risk, and the strategy. And so it just gives you a good overview of what's inside this mutual fund. So we'll click on the holdings, and this will show you that technology is 41%, and 26% of that 41% is to mid-cap growth, and then communication services and healthcare. And you can see this chart over here, it's around mid-cap growth. And you can see where the countries they are from. And you can see that's 85% domestic stock and then cash. And then it's going to shows us the top 10 holdings right here. Shopify, Work, Slack, and you have Twitter, Spotify. So that gives you a general overview of the mutual fund. You can click on fees and distributions, and it just gives you more information. So here it says it's a front-end load mutual fund, and it shows you how much you got to pay for how much you're going to invest. So the more you invest, the less front-end load you have to pay. And it just goes with minimums, and you got to additionally invest $250. And yeah, so that gives you a good overview on how to search for mutual funds and the expenses you're going to pay, and just a good general overview. And it's just a good way for a beginner to get familiar with how portfolios can be built and what professionals are picking. It just gives you a good idea of getting familiar with the market in an easy way. And if you do choose mutual funds, this can be a less riskier way if you choose the mutual fund that is less risky. And it gives you time to look into individual stocks as you're getting invested already and getting in the market. And I have a stock market group chat that you can be a part of if you want to get into it. And thanks for coming to my video, and have a great day.